So our next Armchair interview will be run by Mike Versace, Global Research Director, IDC Financial Insight, and he'll be interviewing Bill Gajda, Head of Global Mobile Products at Visa. So please join me in welcoming both Michael and Bill.
Right up here. Take a seat. Have a seat. Yeah. So hi everybody. It's great to be here. Great to be here today. I'm going to open up with a couple of comments and then get Bill up here. Then we'll go into some questions and answers. So, sort of the premise for the discussion is really the evolution of mobile commerce, and we at IDC think, we're far beyond what we would describe as first and second generation capabilities, payment types and methods, billing and remittance networks and handling procedures, buyer and seller interactions, and really beyond the requirements of advanced marketplaces that today might be lower in margin. And we're really heading toward this third platform of capabilities and opportunities that are both enabled and constrained by a number of factors. I'm going to talk about what those factors are just quickly. So one, moderate but certain growth in mobility. Clearly, we see mobile device volumes cresting 2 billion by 2017 with an increased emphasis on smartphones, further penetration into the emerging markets, as well as ongoing replacements of devices worldwide. Number two, and this is really important, I think, is that in the consumer surveys that we do at IDC, consumer satisfaction around mobility solutions is really on a steady increase. And that's across all forms and commerce that are available via the mobile device. The third trend, certainly the impact of new laws and regulations and the marketplace opportunities that those both inhibit and create, both for incumbents as well as new entrants in the mobile commerce market. Number four, the further disintermediation and leverage of traditional players, primarily in this case, we think retail banks and B2C and B2B markets. Number five, big trend, shift in market liquidity and the credit capacity, certainly, of new markets as well as in existing markets, and the evolving requirements for customer protection, particularly in emerging markets. Number six, the push to get into underserved markets with new solutions that lead with three primary attributes. One, high capacity. Two, simplicity. And three, very important, the elegance of the mobile commerce and the mobile payment solution. The seventh trend is just the goal of owning customer intimacy, owning the customer experience in a mobile commerce environment, and much less of a focus on owning the customer. There's a big distinction there. So these are the guideposts that we say underpin the third platform of commerce and payments. So again, welcome everybody. My name is Mike Versace with IDC Financial Insights. I run the worldwide risk and IT infrastructure practice for IDC. As all you know, IDC is a leading research firm. And I'm here today with Bill Gajda, who heads up mobile strategy for Visa. Bill comes to Visa with 15 years in the mobile industry from GSMA, Bell, Ericsson, and a few other organizations. And with these general inhibitors and trends in mind, I think we're going to start with Bill's presentation today, focusing on the evolving landscape of mobile and commerce and a shift to this new third platform. So Bill?
Thank you. Michael, thank you very much.
Thanks.
Good morning. Like hopefully you do, I want to get to the questions, but I just wanted to provide a few minutes of context, some observations we're making around the world as we see this incredible growth in mobile commerce, and hopefully add to the context that we've already heard this morning from this morning's speakers. So where I'm going to start is actually with developing markets. I think Wendy and the other speakers so far this morning have been focusing on what's happening in what we call sophisticated or developed markets, smartphone-based, feature-rich, really driven by this third platform that creates this new customer experience, building on 50 years of payment. What's happening in developing markets, though, I think is actually more profound and isn't just kind of transforming the way people make commerce, but actually transforming the way that these economies work because of the introduction of commerce through mobile for the first time. So if we think about what's happening in these markets, over the past 5 or 6 years, more than 150 mobile payment schemes have been launched around the world, primarily by mobile operators, and more recently some financial institutions that are really providing millions of customers with the first opportunity to make a payment electronically on a very basic mobile phone. So far that those payments have focused on things like airtime top-up and person-to-person payments, but we're starting to see these schemes expand into things like bill payments and school bills, transport, utilities. And so we're really seeing very basic mobile phones transform these economies and provide this capability for people to make electronic payments for the first time. Most of us have probably heard of M-Pesa if you follow the mobile payments space in emerging markets. And for years, that was held up as kind of the one shining example that gave us a glimpse into the future in terms of what was going to happen in this space. But we're now watching many of these schemes take off and really attract millions of customers and conduct millions of transactions. And just a couple of examples, Easy Paisa in Pakistan, which is actually one of our Fundamo platform customers, completed in less than 3 years, 83 million transactions and almost 2 billion in payment revenue. Bcash in Bangladesh, another Fundamo customer, is actually, I think, our fastest growing. In less than 2 years, 2.2 million users, and they're adding 11,000 users a day. And so we're starting to see markets outside of Kenya show kind of really strong growth as more and more people take up these services. And if you look at the markets that we focus on, and there's dozens of them, but just look at markets like Indonesia, 158 million people that are unbanked but have a mobile phone, 110 million in Bangladesh, 76 million in Nigeria, 61 million in Pakistan. This is an enormous opportunity to really replace cash and check with its inconvenience, and in many cases, actually its lack of security in these markets with a very safe way to make mobile payments on a very basic phone, not requiring a smartphone. And so I think that what we see in emerging markets in some ways is going to leapfrog some of the discussions we have later this morning because they need it, right? Necessity is going to drive a lot of innovation in this space, and we're already watching that happen. And just to give you a bit of color, this is actually one of our Bcash agents in Bangladesh. And you can see commerce is being transacted in these markets. This is the next middle class. One of the themes you talked about is what's happening in terms of liquidity. Well, it's focusing on markets that are growing very quickly, the fastest growing in the world, and in markets like Bangladesh, Pakistan, Nigeria, and others. So this is a Bcash agent, and along with his basket of goods that we're all familiar with, sodas, fruits and vegetables, batteries, milk cartons, etc., he also sells mobile money services. The ability to walk in with any mobile phone, take cash, and through this agent, convert that into electronic currency, and before you leave this stall, being able to top up your mobile phone, send money to friends or relatives, and pay your utility bills. And so really transforming these economies, and this is a real agent in Bangladesh. Of course, in developed markets, and we've already started talking about it, there's kind of 2 or 3 themes that I want to talk about. Obviously, you saw the players when I talked about developing markets, and it is, you know, the M-Pesas and mobile network operators and Standard Chartered Bank. We talk about developed markets, it's really all about creating an edge on what is already a very robust and well-used electronic payment system. Obviously, Visa and our competitors have been around for 50 years. It's really easy to make a payment in markets like the United States. And so if all we do is substitute a swipe, and no signature required now even, with just a tap of the phone, we're really not doing enough for the customer in terms of using mobile to transform commerce. And so I'm sure we'll get into the discussion around QR codes and mobile point of sale and NFC, and all this is important. But what's really got to happen is this focus on the customer, where it's not just payments, but it's this broader commerce experience that adds value around security and privacy and consumer control, real-time alerts, linking loyalty cards to payments, to really create a commerce experience where payment still resides at the center. I mean, that's the moment of truth, but it's a much broader experience for people. So I'll start with NFC payments, and I'll be the first to say that the United States isn't going to be the lead market for NFC, and it's because payments are easy here. Well, there's a couple reasons, but one of them is It's easy to swipe your card and walk out of the store now without even signing for almost every transaction you make. And so NFC is marginally more convenient, but again, it's easy to make payments here in the United States. If you go to chip and pin markets, where it's not a 1-second swipe and walk out, it's a 12 to 20 second insert your card, put your pin in, wait for the network to do the transaction, get a receipt and go. These are the markets where NFC is taking off because it is marginally, or rather significantly more convenient to make an NFC payment than use a plastic card today. And that's why we're seeing Western Europe, Hong Kong, Singapore, Australia, New Zealand, and Canada take off for NFC. I think US will be a fast follower. We'll also see the growth of QR codes, but I think after some false starts over the past 5 years, we're seeing the critical elements to make NFC a success come together, whether it's the availability of almost every smartphone with NFC capability or every merchant device being shipped in the United States having both chip and contactless capability. So I think we're going to continue to see this develop. In terms of mobile remote payments, and our Walmart speaker, she talked about it, we are seeing more and more e-commerce move to the small screen, and that's almost becoming very mature in markets in the United States. But increasingly, we're going to see this in-app commerce experience, where a frictionless ability to purchase goods, not just digital goods, but physical goods in an application is going to grow, and Visa's spending a lot of time thinking about how we take our V.me wallet and other capabilities to eliminate the friction out of commerce as it moves from a large screen to a small screen and goes from fixed to mobile. And obviously that's another key theme. And then the last key theme is mobile acceptance. And this is a theme that crosses from developing to developed markets. So if you think about what's happening in developing markets, on the one hand, millions of people can make very basic payments with a mobile phone, and we provide a product where they can get a companion plastic card in addition to their mobile phone that they can use, with merchants that accept Visa. And then if you think about the millions more acceptance points that mobile is going to drive, Javelin Research, I think, has said that by the end of 2013, 9 million mobile point of sale devices around the world, moving to more than 30 million by 2017. That's doubling the current acceptance footprint around the world. So we say publicly that there's just more than 30 million or slightly more than 30 million places you can use a Visa card today, and Javelin's predicting that that number could double in the next 4 to 5 years. So it's going to be transformative in markets in the United States. We've seen that with Square, more than 4.2 million merchants that could only take cash and checks before, that can now accept electronic payments. And it is that long tail of merchants where traditional acquiring models didn't fit. But if you take a look what's happening outside of these developed markets, it's going to transform the landscape, where on the one hand, you've got millions of people that can now make electronic payments and millions more merchants that could really never hope to be a Visa accepting merchant because they didn't have fixed electricity, they didn't have reliable telecommunications, and they couldn't afford the price of an acceptance terminal. So again, I think whether you're talking about Bangladesh or the United States, mobile is going to transform commerce. Obviously, Visa is very active in this space, and hopefully that's a bit of context before we get into some questions.
Great. Thanks, Bill. And also, love to take some questions from you too. We've got about 8 minutes left here. You covered a bunch of the questions that I had, so great, thanks for that. So as you're sitting there, I'll come up with a couple questions here, but I'd really like to hear, and I think Bill would also like to hear from you too about some of his specific remarks. So let's start off. Let's see. Well, we talk about the $1 trillion worldwide market for mobile payments, and we'll forget what year we actually get to $1 trillion, right? But we see the volume coming from a number of different things. First, browser-based checkout, in-app payment applications. Second, proximity payments, which include NFC and 2D barcode. And the third, distant, would be P2P payments. Mm-hmm. Do you see the breakdown that way? Does Visa see it that way? Or do you see trends moving in different directions, particularly for emerging markets?
Right. I think those are the categories. I mean, I think that in emerging markets in particular, you're seeing this kind of mobile-to-mobile transaction because of a lack of physical infrastructure. So this is really where you're starting to see the personal payments start to take off. We put a new transaction in our network about 5 years ago called the OCT, the original credit transaction, which allowed people to push a payment from their Visa card for the first time, as opposed to a merchant pulling an amount off your card. And and the thing is, it was a great transaction that didn't really have a channel. Mobile's that channel. So we now have the ability for any Visa card to send money to any Visa card anywhere in the world because of that OCT, and mobile is the way that's going to happen, right? So I'd say that P2P is really going to start taking off, and we've already seen that in developing markets and in places outside of the United States. But I think you've also hit the broad categories, which will be NFC and QR codes at the point of sale, and then this transformation of commerce onto the small screen.
I think it's a great point. I mean, credit transfers have been sort of the basis of payments for a long time, and in advanced markets like in the Americas and in the U.S. specifically, we're a debit.
Right.
We're a debit society here in many ways when you think about the way payments flow. So credit transfers and mobile enabling that's an excellent point. I wanted to talk also a little bit about infrastructure. You know, we think about payment infrastructure, and we think about the huge investments that Visa and others have made in infrastructure over the past 30, 35 or 40 years. What would you say is the state of mobile payments infrastructure today in the ecosystem, and particularly in emerging markets? What's needed, and where's Visa investing?
Right. So I would say, obviously, you're right. Billions of dollars of investment in our traditional infrastructure, and we connect 2.2 billion cards and 40 million merchants and 16,000 financial institutions, and at peak we can do 20,000 transactions a second, and that's our physical network. I think what the transformation we're seeing now is how do we create an edge around that network to allow for all the new experiences mobile can provide. So to your point, you're going to this third network where we started the physical network and then this IP-based network, and now it is going to be mobile-centric and social-centric and cloud-centric. And so how do we build on the infrastructure we've invested in 50 years to allow all this innovation to take place? Right? Because I don't think the core of the network's going to change, but I think if you look at what Square's done, what Level Up, what all these other innovation companies are doing in this space, we need to give them access to an edge of a Visa network so they can take advantage of the scale. And so this is really where we're focused, is what does the edge of that network look like? How do we expose APIs to third parties so they can take advantage of it? But at the same time, it's got to be as secure and scalable as it is today. And that's a challenge for us.
Yeah, excellent. And I think one of the things, that's a great point, one of the things we see too is the solutions, we were talking about this earlier, the solutions that are really going to succeed in the market, whether they're solutions that are provided by Visa or by banks or other traditional players as well as emerging players, are solutions that are designed for mobility in. Right. So what are the fundamental mobile requirements and applications and capabilities available today versus designing from infrastructure out, right? From legacy infrastructure out. So mobility in versus infrastructure out, I think is a really interesting concept to think about. One more question before I turn to the audience about customer protection or consumer protection. When we think about certainly the legacy of things like Regulation E in the US that was built out in the 80s to support ATM POS markets and cards and the like, what's the customer protection regime, if you will, or infrastructure that's needed in more of these less advanced, more emerging market and emerging market capabilities?
Yeah, so I think there's kind of 3 points I'd make. The first is there's a lot of consumer education that needs to take place to help them understand that mobile can and should be more secure than the existing payment infrastructure, because it's personal, because you can add layers of security because it's electronic, right? Because you can drive security through applications, etc. The NFC standard, as an example, is arguably more secure than a traditional mag stripe because it's chip-based and uses different encryption technology. But people have really got to be educated about that because they think of their mobile devices potentially differently. I'd say the second point I would make is in terms of consumer protection. I would say, there's a lot of discussion around whose data is it? Is it the merchant's data, the bank's data, is it Visa's data? And I think if you start from the premise that it's the customer's data, and it's really theirs, to assign rights to. And so anything we think about in terms of the data space or how we can provide value-added services, it's based on customer opt-in, permission-based, kind of checking back, because we really do think it's a consumer's data. And then let me extend that to emerging markets. So on the one hand, we should all be concerned around how much data is being collected, how is it being used, is it being used for customer benefit, is permission in the middle of it? But we need to think differently in emerging markets about how positive the creation of this data can be. So as an example, most people in these emerging markets don't have a credit history. right? They don't have any of the things that would allow them to develop a credit history in the way that we think about it.
That's right.
So as they start making mobile transactions, just topping up their mobile phones, sending money across the country in Bangladesh, how can we use that data so they can build their own credit history based on these very basic mobile payments and eventually start that road to becoming more traditionally banked? They don't have a financial identity.
That's right.
But we could use this to create a financial identity for them, and it's got to be theirs.
Yeah, that's fair. That's excellent. We only have a few more seconds left for today, but some questions. Yes, sir.
Yes, Bill, a question on what's the methodology or the mechanism by which a person in Bangladesh that doesn't have a credit card or a bank account, how do they get the actual cash into the system in the first place? What's the bridge between cash in the hand and the actual mobile system?
It is the most important question about these emerging market systems. So basically using a platform like Fundamo, the company we bought 2 years ago, that you have mobile operators or banks set up a network of thousands of agents. In Bangladesh, let's say it's about 12,000 agents. You can go to any one of these agents, because they're all connected, give them cash. They turn that cash using your phone number into a new mobile money account that's based on your phone number, and then just using your phone number, you can make basic transactions like topping up your airtime or sending person-to-person payments, or in many other markets, paying utility bills, paying school fees, buying transit tickets, etc. And then you can go to any other merchant and get that cash out. And so literally you need to think about them as human ATMs. And that is at the center of these systems, is a network of human ATMs on the one hand, and the fact that your account is based on your phone number, and that's all you need to remember on the other hand. And then what we've done is come up with a new product called Visa Mobile Prepaid, where we take a Visa account, a virtual account starting with a 4, put it over that phone number to allow them to make open loop payments so they can make an e-commerce transaction. They can accept money from Western Union where they couldn't using their phone number, or they can send money internationally. And so we think that we want to use this infrastructure of agents and phone numbers and build interoperability and open loop on top of it.
Excellent. I think we have time for one more question. Thanks, Bill.
Sure. Very quickly. So we've seen in the news recently that PayPal, Google, Lenovo, and a few others have started an industry effort to create a standard that might replace passwords, where you could use any biometric on these mobile devices, one-touch payment, for example. If that initiative is successful, how big of a deal do you think that would be for mobile commerce, and when do you think we'd first start to see results?
Yeah, so I think we're going to see profound changes in commerce because of the capabilities of mobile. And whether it's things like biometrics, and we look very closely at biometrics as well, or location-based, or device identification, device ID. So think about it the way you could authenticate a transaction to make really sure that that person is using the right credential. If you could have a card number linked to a phone number, validated by a location, and validated by a device ID. And by the way, the customer doesn't have to do anything. This is all happening in the background. They open up their application, they push pay, and when they push pay in real time, we're taking all that information and going, you know what? We're really sure this person is who they say they are, using the right credential. So you can see a future where there's no signature required, no passcode required, no username, password, no expiry date CVV. You just push pay. Because of all these capabilities, we can authenticate you, the user, and your card. I think this is going to transform the way we think about payments, and mobile will be at the center of it.
Excellent, Bill. Thanks. I mean, this is a great topic, and thanks for all of the questions. But this topic of identity and the ability to build identity from consumer behaviors is a really interesting one, and one I'm sure we'll hear a lot more about during the rest of the conference today. So, Bill, thanks very much. It was a pleasure.
Thank you.
Thank you.